Hello everyone, this is Accounting Education channel and today we'll be talking about accounting equation. In order to understand accounting equation, we need to clear some points. 1. Business is independent entity. Second, it's whatever the business has, it came from specific source. And third, in order for money to show in one account, it has to come from another. Whatever the business has, it came from a specific source. This is the core of the accounting equation, which says what the business owns is equal to what the business owes. And this guarantees the balance between both. And to explore it further, we are going to look into our friend Dany business, who has $100 and he wants to invest them. Dany decides to use the $100 to buy and sell gift boxes. So he created the business and he put the $100 as business capital. When we will be looking at Dany business now, we will see that he's having $100 as cash, which came from Dany, the owner. So the business is having now $100 cash as asset, and the source of this asset is shareholder equity or Dany capital. When we try to visualize Dany balance sheet, we'll see that it consists of two parts, cash $100 and equity $100. Let's go for some definition. The $100 cash is the resource of the business, and the business can do whatever I want to do with it. This is an accounting called assets, which is the business resources. The $100 shareholder capital came from Dany. So if Dany decides at any point of time to quit the business, he can take this $100. This is an accounting called equity, which is shareholder remaining money after liquidating the business. Let's bring what we know so far to the accounting equation. What the business owns equal to what the business owes. Cash of 100 is equal to Dany capital of 100. In other words, total asset or the business resources is equal to total equity, the shareholder money, and both sides are balanced. Let's start bringing some new elements to our accounting equation. Dany business was about buying the gift box for $1 and sell it for $3. However, minimum quantity he can order is 110 boxes. So Dany needs $110 to place his order, and his business has $100 only. So the business now requires additional $10. Dany called his friend and borrowed the $10 for the business. So this $10 now is business loan, which need to be paid at later stage, and is called in accounting liabilities, which is the money owed to third party. Let's go back to Dany business balance sheet and see what's happened. Now new section will start showing liabilities, which has the $10, the business loan. And our accounting equation formula will start looking like this. What the business owes will have two sections, Dany capital beside loan from friends, which is mean that assets, the business resources, will be equal to equity, shareholder money plus liability money owed to third party. And of course, our both sides are balanced. And now since Dany is having his 110, he went and purchased the gift boxes, which became his inventory. Inventory is the goods or supplies the business has. And now Dany business balance sheet will start showing inventory of 110 instead of the cash. And when we look at the accounting equation, we can see the same thing. Inventory of 110 is equal to Dany capital 100, loan from friend 10. Dany here, he's so much happy. He managed to sell all the gift box for $3 each. So we can see that his sales or revenue will be equal to 3 into 110, 330, while cost of sales will be equal 110. So Dany generated a profit of 220. This profit is representing the link between net income statement and balance sheet, and it will be added to return earning under equity section. Return earning is referred to accumulated profit after deducting dividends. And now when we look at Dany business balance sheet, we'll see new elements showing. Return earning, which is showing the 220, the profit Dany made during his sales. Let's stop here for some time and start looking at our balance sheet. We're having our cash 330, which is the asset, business asset. Of course, this is very simple balance sheet as assets usually contain more than cash like inventory, building, lands, and other stuff. Then we are having our liability. And then we are having return earning and shareholder capital, which is both are equal to total equity. So our total equity is 320. When we started the business, we had $100 only. Then because of the profit, it's reached to 320. And of course, if the business making loss, it will go down. Now, if the business want to be liquidated, of course, we are having the 330 in cash. We first pay our liability of $10, then Dany can take the remaining balance. So we can see that a new definition of equity is the shareholder remain money after liquidating the business and paying off all the liabilities. And when we will revisit our accounting equation formula, we can see the same elements showing. Cash of 330 is equal to Dany capital 100 and return earning of 220 plus loan from friend 10. Our total asset or business resources is equal to our total equity plus liabilities, which is the money owed to third party. And of course, our both sides are equal with each other, no matter which transaction took place. I hope you enjoyed this video while you are learning about accounting equation. If you like this video, press thumb up and subscribe to the channel so you will not miss similar videos.